end of that music and all those legal words means we are ready for a Friday edition of the Halftime Report. Friday fun day, as we like to say. Frank's charts, PMI numbers come out. We got earnings coming in. A lot to break down. But listen, I need a Friday fun day, gentlemen, because I've been in a foul mood all week. I have not enjoyed this trading environment this week. Has it been horrific? No. Has it been? I am bored out of my mind.
I was going to say, what are you foul about?
Mind. Like, it's like, oh my gosh, I have to be responsible and measured, and I have to, like, I'm just bored.
I am amazed by this open by you today. I'm floored by it. You get nothing going on this week. You get a slight fade to the downside. I think that fit your cash flow philosophy pretty decently.
Once again, it's not terrible, right? I'm just like recession, no recession. Gold, what are you gonna do? Debt ceiling, I can't cover too aggressive on gold because that could flare up at any time. Are we gonna pull back deeper? Are we going to do nothing? It's messy out there, right? It's messy. I'm just bored.
I was going to say, I think you're overanalyzing a few dojis here.
Oh, do you know your brother?
Mm-hmm. Yeah, you're overanalyzing a few dojis here.
You know your brother?
Yes, I do. And you're overanalyzing a few dojis here.
That would not be the 17th time. But let me get pleasantry. Frank, how are you doing today? How are you
doing good. Today? Excited to be here. Excited to be 1 week closer to earnings. See, I'm grumpy for different reasons than you, Mark. I am grumpy because this is the worst time of the earnings season, right, Maddie? This is where you don't have many behind you. You got a ton in front of you in the next 2 weeks.
The 2 weeks in front of Apple and the big dogs. It
impacts. Yeah.
And the ones behind you haven't set up yet.
They just generally haven't set up. And so it puts you in that spot that you just, if you're like me, purely technical on everything, you hate earnings season. Everyone knows that I complain a lot at earnings season. It'll be worse next week, and then it'll get better from there, though. So that's where my head is, Mark. But other than earnings, and honestly, a few really nice charts that we are going to be able to work around. Not a tremendously big watch list, as I'm sure Maddie ran into the exact same
I know
thing.
you too. Like, I don't care what the environment is. You're going to bring me some clean charts.
We're going to find you something. We found a few.
We do have some clean charts. There's no doubt about that.
And that is why you're professionals.
I'll tell you, it's obviously the earnings environment. This is not abnormal for the second weekend earnings. I think the one thing you're probably a little crabby at is we've gotten Tesla, we've gotten Netflix, and we don't have a theme emerging out of earnings yet.
Nope.
And that's one of the issues right now that I think is clouding.
I think you just know I don't have themes to work with.
Yeah.
Bearish, bullish. Like, I don't
well, and you got positive data economically, you got negative data economically this week. And so there wasn't really anything that transpired this week that changed hardly anything this week. And that's why I said we're probably overanalyzing a few dojis in the market this week because the market's in hesitation mode right now. You've had some volatility this week. There's no doubt about that. Most of that due to earnings, but you have had a little bit of volatility in the market, but you haven't had anything change the conversation really. You started off the week economically talking about the Empire State Manufacturing Index that came in better than expected. Later on in the week, you talk about the Philadelphia Fed Manufacturing Index that comes in worse than expected. We're talking about how you got to wait on PMI numbers. They come in slightly better than expected. It doesn't really change the conversation there. When you're looking at the earnings landscape right now, you really haven't had enough data yet to determine one way or the other how earnings is going. You can say it's better than feared, but you can also look at numbers year over year and say there's some concerning data there. And then when you came through the first little round of earnings, you have 90% EPS beats, 63% revenue beats, but that's a lot of finance. That's a lot of finance. You haven't really had anything yet. You get into the second week, you get into Netflix, Tesla week. You hope a lot of times in earnings season to catch some degree of theme starting. Either one, hey, earnings was really expected to be dire and it's coming in a lot better than expected. That's a little bit of a theme. Or earnings, hey, have you seen these growth numbers year over year? They looking pretty hot. That's a theme. Or, hey, we got Netflix reports earnings and they got this forward-looking guidance that looks that we can anchor against and overcome some of the other concerning data. None of that transpired this week. And so when you're looking at this week of data and you're still hesitation, technically, you haven't really changed anything technically. The market's still trying to fight off those lows. Bulls should be very thankful for DTE option traders out there. They've actually provided a tremendous amount of support to the intraday bullish analysis.
Did it again today.
They did it again today. Same pattern too. Violation of intraday support, pop back right back up, fight toward the highs. Did it again today. We'll see how we finish here today. But again, I think that's the context of why you're crabby. You're looking for a change here.
You do know your brother.
And we just haven't got it yet.
No, it's just I'm not. I don't know anything more than I did last Friday. I don't like that.
No, you're in a very similar position as we were last week. You're still fighting the 4,200 breakout zone. You haven't really given up anything. The 9 EMA isn't providing, support at this point. But I wouldn't exactly say it's a weak environment technically. And so, yeah, it's just been one of those weeks. That's why I said, I don't know why you're crabby. I think it would favor the theta trader with a little bit of a downward movement in price.
Yeah, no, I mean, it's like I said, it's not terrible. I've been hitting the gas pedal hard, and I've had to pull off the brakes a little bit. I like doing that, right? I'm a trader. I like doing stuff, even if it's conservative. But give me that monthly chart, man. I want to get Frank's take on this. Talk about a low range. Where's that monthly candle?
Yeah,
what day is it in April? Like it's there, right?
It's right on it.
Holy cow, is that a small range?
That's a really tight little range. That's a tough cookie to crack, right?
Right. Just from a pinch perspective, Frank, from moving average, if you just looked at the monthly chart, right? Just break that down for us, how you'd look at it technically.
Well, if you're looking at this, purely, from a technical point of view and nothing to see here, and you're not caring that it's the S&P versus a stock or whatever, you're basically saying this has to get through that 20 before I can really turn, hit that gas pedal again, as you hit, right? It just is a tough level to break. And sure, we can smack our head into it, and the more we do, the weaker it gets. But I mean, some people can take a punch better than others, right, Mark? And that's one of those moving averages that absolutely can do that. So you're basically on the sidelines right now. At least if this is the only chart that I trade, I'm looking at this saying it's got to break that 42. That's clearly, horizontal resistance level, but every bit as important to me. That's also that 20 weekly. And there's nothing to see here. If somebody told me they bought that chart today, I'd be like, good luck. I ain't joining you. That's for darn sure.
Yeah, Matt, we bring up Forex Factory. Let's go over those.
Well, and let me just add a little bit to the monthly conversation here.
Listen, I'm as excited to make that candle as exciting with analysis as I possibly can.
I don't know if we can make that candle exciting. What I can say is, just again, for those of you who have not been paying attention to the technical conversation over the last couple months, that 4,200 zone is rock solid. Mm-hmm. And so the data that came out this week was not exactly compelling data one way or the other. It wasn't compelling data
on earnings and economic, right?
If anybody is trying to take, large takeaways from the data that came in this week, like I was on the sidelines, now I'm on the recession camp, or I was on the sidelines, now I'm on the soft economic landing camp. I'm like, nah, that's not this week. We haven't really seen anything change this week. But when you're looking at that 4,200 zone, it's going to take a little bit to break through that. This is a zone that has been important to the market, not just in the current moment in time, but it's been important to the market in the past as well. That 4,200 zone is rock solid. If it was just horizontal resistance on the short term and the intermediate trend, I would say that's a strong resistance level. When you have the monthly 20 SMA hovering above that channel, you obviously understand the context why the market's had a little bit of a difficult time breaking out of that, because again, if the data hasn't changed, well, you can't expect the market to break out with the data hasn't changed yet. And so the market is clearly still waiting on a catalyst one way or the other.
It just is, great breakdown. We will pull up Forex Factory and let's look at some PMI numbers that nobody will talk about on Tuesday. because that's how it is, right? When you don't have a theme, when you have back and forth, like you get the data.
We move on to the next data
and
point.
then you move on to the next data. And so for today, yields up, dollar up a little bit, gold down, bonds, down, like, just, and then Tuesday, something else will happen. But I'll be honest, man, when I saw these numbers come in, this was the most important economic report for both of us this week.
It was.
And got a light week next week as well before you start getting into some more. I think we have some inflationary data on Friday. But I looked at those and I was like, is that recession ever going to come? I was like, they were surprisingly strong. Manufacturing in particular, in actual expansion level, technically, services just a really healthy beat, right? And I have been in the winter is coming camp, and I look at that and I'm like, I think I need to drink more, right? Because I don't I don't know if I know anything, right? So talk about those numbers.
The recession prediction game is a very difficult game to play, because I was trying to find a baseball batting average that would make sense against. Like Mark McGwire's batting averages last year was like 193. That's about the same average as people being accurate on predicting recessions. It's a very, very difficult game to play. And so when everybody gets into, the recession's upcoming, we've had this recession conversation, not for the last 3 months. It's been going on for the last 18 months in the marketplace. And it's not just people sitting in a YouTube program. It's the banks doing this. The banks of it. It's the Wall Street institutions.
The smartest people out there, right?
Yeah. And I think this is now the third consecutive quarter I've seen them push that down the road a little bit. And so it's one of those situations where you look at the economic environment and the current economic environment is very difficult. And you got data that suggests that we have a slowing growth environment from an economic perspective. But recessions, like the actual recession conversation, is not like a single economic report where all of a sudden we get this economic report. It's like, ooh, here's a recession. Right? There's a slowing growth environment. There's difficulty ahead from an economic perspective, but how difficult does it get? That game is a very difficult game to be accurate on. You got to be data dependent. And when you're data dependent, you get data like manufacturing data came out today, services came out today, showed that the economy is not catering here. And when you're looking at the PMI numbers from a manufacturing perspective, look at the last few months here. A little bit of improvement over the last few months in PMI numbers. Look at the catering, all of the back half of 2022. Look at it coming back up. That's an improving condition, not a deteriorating condition. You can't deny it. What are you going to do? Just discount what you see in front of your very eyes? You can't deny that. Those are raw numbers coming from the economy, and it's been an improving condition. And so when you hear people on financial media or here in the halftime report, when we're talking about it and we're talking about, hey, you got some slight improving conditions in the economy, we're looking at where it was 3 months ago, where it is today. And you can, and I don't know how you can make an argument that based on the data we're seeing that it's worse today than it was 3 months ago. It's just simply not. PMI numbers were around 46, 47, 48 3 months ago, came in above that 50 handle today. The expectation was where it was where it kind of was over the course of the last couple months. But Mark, these expectations have been missed for 4 consecutive months now on the PMI numbers. And so, and again, on the same coin, an improving condition doesn't mean the recession is never going to come. That's not what it means. It just means it's an improving condition. When you're looking at your services, now the manufacturing's, going to be a little bit more lagging than the services, as the U.S. economy is more of a services economy than it is a manufacturing economy. But you look at services here, and you got to say the same thing. Over about 6 months, the last 6 months of 2022, all in that mid 40s, 45, 46, concern everywhere. PMI numbers over the course of the last 2 months came in at 53. Anything above 50
you're one candle away
expansion.
from starting an uptrend.
Hey, listen, I watched Major League back in the day. Three's the trend.
Yeah, so you stole my joke.
I know I did.
You stole my joke. Major League. I don't know if it's underrated, but it should be over.
It is underrated. I don't care what the rating
like,
is. It's underrated.
like if you don't, Major League stands the
Funny,
test
funny
of
show.
time
Funny,
to
funny
today.
show.
Still funny today. Still funny
Yeah.
today. Let's get over to commodities. Because whenever you have economic data come out in a world where, oh my goodness, what means what? Like dollar's telling you nothing today, right? It's like
I mean, it was telling you something earlier.
It was trying to
it's
jump,
yeah.
but then it was like, should I really make a run on a bunch of survey data to 400 executives?
See, look at you throwing cold water on the PMI numbers already. Like, look at you. You can't stop.
Just can't
We
help
just
it.
went through 5 minutes of talking about the context of PMI numbers. And the first chart you bring up, you're like, yeah, if you guys want to make radical assumptions on 400 economists out there, my goodness, your bias is just bleeding.
Oh, I don't hide it. I'm trying to make a jump, then came back down, and it's like we're gonna make our decisions later, right? That's a really tight outside of Wix, just in bodies. That's a pretty tight range this week, man.
It is very tight range. I mean, you're talking about an intraday support level at 2770, and you're talking about overhead resistance at 2778. It's extremely tight, even for the dollar. It's extremely tight here. The test up was the algorithm move off the PMI numbers. PMI numbers came in better than expected. Currency is typically, I was about to say always, but it's not always, but it does typically move in the direction of the beat economically or the miss economically. So a beat on PMI numbers certainly sends the dollar up. And when the dollar goes up, we know the cross current on that. Gold comes down, commodities come down. And when you deal with these types of days where you have economic reports, I doubt we would have saw this type of attention to the PMI numbers if they weren't simultaneously back-to-back economic reports, but that is what we got. So we had a little bit more algorithm love here today. And I don't mean that with any degree of affection at all regarding the algorithms. But when you come in here to the shortest time frames, you kind of see that immediacy. The dollar's kind of hovering underneath support a little bit. The economic report comes out, and just look at it pound the table here. And that sizable move on the dollar is, and it's flatlined since then, by the way. But that's an algorithm.
It didn't
move.
wait till Tuesday. It already forgot it. Like,
yeah, I was going to say Tuesday's a long time in this economic condition. But when you're looking at this move, that power move, and again, it's all algorithm. It has nothing to do with any part of actual people reading the chart or reading the economic landscape or talking about the differences between what's happening in Europe and Asia versus the US, which are all very important from a currency perspective. It's all algorithm nonsense that pushes the market up, 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 up. And if that occurs, you're absolutely going to see the opposite thing happen on gold here. And so PMI numbers came in above the expectation. Algos punched the dollar up in the short term. Gold caters. The difference is the dollars came back down. Gold hasn't came back up like it did two trading sessions ago. And I do think that's got to be a little bit concerning on gold. And this isn't the first candle that's been concerning on gold. This is the first candle that was concerning on gold. This was really the second candle that was concerning on gold. We did have a slight increase in volatility on the breakout. That's going to be a little bit of a concern. And so you do got some concern in the gold areas of the market. We talked about covering the other day, and
no, that's been our theme this week, because gold is our baby, right? I mean, we probably spend more time on it, and it always will be. And the theme amongst us this week in conversations has been, where do you cover, right? That you should get covered calls working, but just where do you cover? Based on the candlestick, because let's ignore the PMI for a minute, because once again, it will. I mean, we joke, but it will be forgotten on the next data set. Like from just a candlestick, because you're breaking the 20, right? You're breaking the 20. You do have weekly moving averages come up. I still worry about the debt ceiling, in the sense that if that debt ceiling conversation gets going, I can't see gold not going up strong in that situation. For
the only thing worse, though, in terms of over analyzing conversation, I don't know what's worse, people over analyzing economic conversation or the debt ceiling conversation, though. And I know that's starting to creep into the investor mind. It's starting to creep into the market. I personally I don't think there's any degree that I don't think there's any scenario where they don't raise the debt ceiling.
Well, I mean, because we're in the
Like,
Stone Age if they don't, right? So
well, that's money already allocated in budget that people. I just don't see a scenario where they don't raise the debt ceiling. I've been around the market long enough, and I've been around the political environment long enough to understand that everybody's going to make a major issue out of the debt ceiling. Everybody's going to talk about it like it's the end of the world or whatever the case might be, and yet they always raise the debt ceiling. They always do. And so I don't know how much that's going to actually play a role, other than if there's no theme that will add to the concern of the marketplace until it gets resolved.
yeah, my question on them raising the debt ceiling, and this is something that we'll have conversations on in future months, right? Is that will it take economic market chaos for them to move before they do, right? And that is beneficial towards gold in the short term for those few days, right? So just
if they hold out to the last hour, yeah, that's going to be good for gold, bad for the dollar. Yeah,
and so like
it'd be terrible for the market, but.
So where do you, I mean, because here it is, right, man, you have been so consistent on your long-term stop overthinking this and that, but you're not opposed to sneaking in credits for covered calls either, right?
Oh, heavens no. Gold GDX is a great cover call asset class.
So, I mean, you have been such a calming voice, not this year, not the year before, since I literally have known you, like, and we both started doing markets. You're like, listen, gold is a long-term position. Gold is a long-term position. Gold is a long-term position. Here we are. You're at all-time highs, right? All-time highs. Doesn't mean you don't want to sneak in some credit though, right? Doesn't. And so like, in just, this feels like, if you weren't covered, cover them if you got them type candle, right? Regardless of whatever your opinion of economic analyzing, blah, 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 right? So like, how aggressive is my question? Like, how would you be looking at covered calls on gold instruments?
My philosophy on long-term investments is they should all have the mindset of a covered call to a certain extent, because the covered call is the best way to generate cash flow in times of neutrality. It's one of the best ways to offset downward movement in price when you expect downward movement in price. And even if you have a long-term view on any asset class that is bullish, there's going to be many times where you're going to want to cover that instrument, either times of neutrality or times of downward movement in price. In those environments, the conversation is number one, like we've talked about this week. Number one, do you cover? And number two, and if the answer to that question is yes, you've lost momentum, for example, or you've lost support, or you've given up the trend, or something technically changes your projection on the short term, you want to cover that instrument. So the first question you have to answer is, do we cover? And if the answer is yes, the second question is, okay, what strike price do we want to cover it at? And based on the strike price you cover will tell exactly how concerned you are. So for example, if you're very concerned about gold here, and we'll just go to GDX as a proxy for that conversation. If you're very concerned about gold, we're all going to start on that 28-day number, because that's the monthly
It's still
number.
A good number.
It's a very good number, but sometimes you might cover 7 days, you might cover 14, you might cover 21, but a standard is somewhere around 32 to 28 to 32, and anything around that monthly number is perfectly fine. And so I'm going to pull up your deltas here, and if you're very concerned about downward pressure in price, you want to come close to at the money, and you want to cover it right at the money. Now, where's the risk there? You're going to bring in a higher cash flow rate. Obviously, selling a 45 delta, you can cover $1 of the price movement, which will cover this asset class from 33.42 all the way down to about 32.40. And so you're covering $1 worth of downward movement in price. But you're also putting yourself at risk in the short term by covering right here at 34 on anything that snaps back, pops back up, breaks 34 and runs to 36. You just got your asset taken from you. And so that's the question. And so for me, on any long-term asset that I don't want to, concern myself with getting called out, yeah, you're going to want to dance at the conversation of, do I cover at the aggressive levels and take the risk of getting called out, or, you know, at a minimum having to roll up and out and do all those management techniques? Or do I want to give it still a little bit of room to breathe, not really get concerned about that? And so it's really a conversation of, do you sell the 40 delta contract? Do you sell a 30 delta contract? Do you sell a 20 delta contract? And what contract you sell will tell me and everybody else how concerned you are on the asset class. You sell closer to at the money, you're very concerned. You expect downward movement in price, and those moments are saved for like, for example, your stock's neutral and it's breaking support and neutrality, and you expect a big downward movement in price, and you're really concerned in the short term. You want to immediately get a hedge out there, and you want to sell something at the money. That's when you want to be aggressive on the cover call. Where you don't want to be aggressive on the cover call is when an instrument has had momentum in trend, we've been directional on it, it's been a really good moment, and you just given up the trend here. And you go into bullish retracement analysis, and even in deeper bullish retracement analysis, I don't think you want to be too aggressive on the credit that you're selling there, or the strike price that you're selling. And so if I were selling a credit here fresh and before this downward movement in price, I would talk at a minimum 35, and I would still think 36 here on the covered side. And so for me, it would be a debate between the 33 delta contract at 35 or the 24 delta contract at 36 still. And the reason being is, once again, we've given up momentum. You've given up the 9. You may give up the 20 by the end of the day. We'll see what gold does by the end of the day. Again, dollar came back down. Gold hasn't caught that bid yet. Still some trading action to happen here. And so I would still start the conversation at 35, 36. I'd still be in the 20, 30 delta camp. And especially when you're still looking at gold, a violation of short-term support, that's one thing. You come down here to 1950 and you break that 50-period moving average after it catches up to 1950 with the projection that could come all the way down to 1800 at that point. That's when you want to be a little bit more aggressive on the cover call, not simply when you're breaking this level here and now you got a whole bunch of chop in this range. I don't think you want to be aggressively covering 30 points of price action is kind of my point. Whereas if you break this 1950 handle, there's real no support until you work down to the low point. So you're aggressively covering here 30 points of potential price action. I don't think that's wise to be aggressive there. Whereas if you break this 1850, if that 50-period moving average catches up to it, that would be a little bit more aggressive of a move down, or potential aggressive move down, which gold certainly can do. Look at what happened here. It certainly can do. And you want to be a little bit more aggressive in that environment. So I don't think one day of giving up momentum and trend, and this would be the confirmation of that, would signal look out below. And so I probably wouldn't make the decision to be too aggressive on the cover call on gold yet.
You know, the last time we had that multi-week downtrend, we had a follow-up candle. You had a big red candle, and then you had a follow-up candle. Would you wait till Monday to do anything potentially here?
As of right now, this very second, I'd be looking for gold to rebound back up on the intraday. Remember, we were just dancing here just a couple days ago at that low point. You come into the hourly chart, you see that support level right there. That's kind of where we're dancing with right here. And so no, I wouldn't cover right this very second, Mark. I would have to see that violated. And if that violated by the end of the day, I would cover, and it would be probably the 35 GDX contract.
Okay, great analysis. Crude oil taking the day off.
But I wouldn't cover today if that level is not broken.
Great analysis there. Crude oil taking the day off. Let's just flip through the others. We got a lot of show left, and you know, just a lot to talk about. Taking the day off. Frankie, gap fill, hold support. What do you need to see for a short-term swing trade to the upside or downside? This feels like it could go either way, right?
Yeah, it does. I think you want to see a little bit of a dance with some upward movement. I hate situations like this. You are just between stuff, right? I'm between the 200 and the 50. Is that, you know, the bottom of the gap? Is that something I need to worry about? Is it not? I've got the short-term moving average as above me. I hate this chart, to be honest with you, Mark. I don't think you do anything with it. to be quite blunt. If I had to, I'd be looking for the support to form at this level and kind of push back up through those short-term averages. But I don't have to. I honestly can't see a scenario where this chart could do anything in the next week that would make me want to trade it.
Yeah. Now, Matt, you concur?
It's choppy. It's messy. There's a lot of support, a lot of resistance levels, and it's hard to anchor against any one of them without concern on the other one. So, yeah, I do agree with that. I think at this point, you probably need some time to clean up the bottom, or you need to fight back up to the 200 to give us a dance at the 200 for us to get excited about it. So, yeah, I do concur. Inside doji on support, but you got chopped to the left everywhere, and you got moving averages galore everywhere. Tough technical environment to get an edge right now.
Let's go to Church of Bitcoin for a minute. Like when I saw markets were wild at the start, gold's wild and everything, and Bitcoin's like, like, you know, the unofficial VIX indicator said that there was nothing to concern with. But I'm saying, you think I joke? That's my VIX indicator.
I don't think you joke at all. I still think it's funny though.
You know, but that chart might have a little concern with Frank on just a technical perspective. Lower before higher, just based on short-term chart.
I would guess yes, if I had to. I mean, you really wanted this to break, right? You know, you've had that momentum, you know, even when it took some time off and took, you know, quite a while to break out of that, you know, 28 range. You really wanted to see that momentum go, because Bitcoin is a momentum and then chop type of thing these days, right? Now that you've lost the momentum, and I think you can clearly say that you've lost that momentum in the short term, if nothing else, I still don't hate your, you know, naked puts on Bito philosophy, but I do think you are kind of looking at working a little bit further if you are interested in the retracement. I can't imagine that it is just yet. I think closer to that 50-day moving average, the 9 weekly, maybe that's where it can start getting interesting. But yeah, you know, when you lose momentum as a, you know, technical trader, you don't like it, right? Because momentum is your friend if you're a directional type of a trader. And when you lose it, it doesn't mean it can't capture it tomorrow. It's just that I can't see it capturing it tomorrow, right? It's hard to envision the path for that to occur. So you just basically have to go into, I looked at 800 stocks today, Maddie. I'm sure you looked at pretty much, you know, about the same number. I'm not messing with a chart that looks like this, that looks like crude oil, because I have a lot of things to choose from. If it's not clean, I'm not going to mess around with it. And Bitcoin definitely has muddied up a little bit over the course of this week. You know, not enough to be overly concerned, but enough to say, yeah, that momentum has been taken away from me. Let's reestablish that wherever that might be.
Well, and just in general, on a comment on commodities in general, we were all over, not the Bitcoin trend, because it really wasn't a Bitcoin trend. There was a couple potential trades there, but the gold trend, silver trend, the commodity space in general, it had a really good run, and it does look like it's running out of steam a little bit in the short term. And so I do think this is one of the areas, and it's not just Bitcoin. I mean, we just broke down gold for the same reasons. You can look at oil for the same reasons. You can look at copper. You can look at the other commodity spaces as well. It had a good run. I think that run's over. The short-term run is over. And so I do think you're going into that. We need to reassess. We need to look at the beginning of a new trend here. And when you're in that philosophy that the old trend is now confirmed over, and we're waiting on a new trend to really kind of develop, it takes a little bit of time for that to occur. And I don't think that's necessarily a terrible thing, because we're also in that next 2 weeks pockets of earnings where a lot of
everything can take the 2 weeks off.
Yeah, it's a lot of the next 2 weeks is getting the data necessary to get prepared for wherever that next run in the market is. And whether, you know, Bitcoin settles in and forms support, or gold settles in and forms support, or silver settles in and forms support, or the market settles in and breaks out of resistance, that's what we're waiting on right now. So if short-term neutrality or the end of the trends make you a little crabby, that's going to make you a little crabby. But again, a lot of this is getting ready for the next trend. And guys, when you caught that commodity trend this latest go, it felt good. Felt good. Felt great.
And there
felt
will be
awesome.
another one.
there's going to be another one. Don't fight the top end of trends. Wait for them to reassess, be a little bit patient. Patience is a position. It is. Patience is a position in the market. And so I just think we're in one of those moments where the old bullish trends, short-term trends, I'm not talking anything long-term here. I'm just talking in the immediate short-term trend analysis. Those have obviously showed enough weakness and showed enough double topping action and showing enough volatility to officially call an end of those trends. And again, when you call for an end of a trend, that the next trend doesn't have to be down. Most trends have what's called continuation patterns that start a new trend going up. And so that's just where I'm at with the commodity space. And in that environment, while you're waiting on that next trend, yeah, write some covered calls, take a nap or two, settle in, and let's get ready for the next one.
Patience is not, I do not have the same level of patience as you two, but the market over 15
How in the
years,
world, as a theta trader, do you not have that patience?
I'm a weird duck, dude. I'm a weird
let,
duck.
let the theta bleed. I'm talking more directional there. Theta, like
Oh, I added
don't
natural
even
gas this week. You two never would have. That's what.
Hold on. Let's see the damage.
It's not, it's like hanging out, dude.
Don't be shocked if 2 gets violated because what Mark just said.
Don't be shocked if 3 gets violated because natural.
The beauty of natural gas, either of those things could happen.
50-50 delta.
I'm just cash
50-50
flowing. I'm just
delta,
taking advantage of oversized premiums in this range. So that's what I'm mostly doing. But I'm just saying my main point before going off on the Widowmaker was that, listen, I have learned in 15 years that when I don't exercise patience, I usually regret that lack of patience, right?
Trading and investing a long-term game, even if it's applied in the short term.
And so the situation short term is messy, but don't do things that will hamper your ability to take advantage of things when it's not messy, right? Piddle along, piddle as you play. All right, let's get to stock talk. Got a lot of show left. Matt, I don't think we have as many earnings as yesterday. Yesterday, it was rapid fire. You did it, broke them all down. I don't think we have as many today, do we?
No, we don't have as many today, but we do have a couple important ones to discuss, especially for our community. FCX, a darling of the tackle trading community, gapping down, selling down here today. And what's interesting on both FCX and SLB, two of the stocks I was really looking forward to seeing their earnings reports this week. FCX came in with beats. Schlumberger came in with beats. Both of them sold down despite coming in with beats. FCX came out with 52 cents against a 47-cent expectation. Revenue topped 5.4 versus a 5.1 billion expectation. Revenue was pretty decent. But again, a little bit of this year-over-year conversation that it's not always important, but it does seem like it's becoming a little bit important this year, especially, or this quarter, especially with earnings being, everybody kind of anticipating this earnings season. And so you did have year-over-year revenue numbers go down 18%, little concerning there. I take this, though, as a pretty decent report out of FCX. It's unfortunate we saw the gap in the sell down. Technically here, Frankie, it's kind of in no man's land at this point. If FCX is your thing, it's an easy cover at this point. What's your thoughts?
Yeah, I mean, if you're looking for a new trade, probably not there yet. It dips down too much. I'm going to channel my inner Mark, though, and maybe want to sell some puts if we get a little follow through on Monday and Tuesday on this downward move.
You dip down to 36 and give us a reversal. I'm going to channel my value technical hunter. And
I mean, it's one of those.
This was not a bad report out of FCX.
But Matt, the price response doesn't surprise me because for whatever reason, commodities have been on the butchering block this week from price action. Iron ore, copper related, uranium, oil, everything. Coal. Like it was just, let's go get them. Right. And it was just like fast and furious everywhere. So it's not surprising that on a good report, you have a negative price response just back up. Listen, you can't have it both ways. You cannot kill off commodities, but then say recession isn't here and everything else. Right. There's a discongruence there. Right.
Yeah.
And
something's got to break on that.
Something's got to break. You can't have it both ways. You just can't. You can play your games for a couple days. Technicals will give you a good idea. Let's hopefully we get a nice.
I think it's an overreaction to a decent earnings report, and I just feel like there is. Look at gold today. dollar breaks up on the algorithm, comes right back down. Gold doesn't budge, doesn't budge off the initial sell. The mentality has shifted a little bit in the commodity space this week. There's no doubt. It's probably adding a little bit to both Schlumberger and FCX's reports. I think it's an overshoot. But once again, you got to respect violations of trends. You got to respect gap analysis, and you got to respect the technical condition, because the market's never wrong. We need to adjust to the marketplace. And so in terms of what's going on with the FCX, I do think it's look out a little bit below here, the gap and then the sell down from a technical perspective. But my take on their raw earnings numbers were this was not a bad report coming out of FCX. Got beats on EPS numbers, got a beat on revenue number.
One last thing on that, Matt. The market's never wrong, but bottoming patterns will tell you when it's changed its mind.
It will. Oh, absolutely. The market changes its mind all the time. Yeah, I'm not trying to argue about that. Schlumberger coming out, sell down behavior. Another report that I was looking at specifically for how's the market seeing the earnings landscape from an energy perspective. Last quarter was really the first quarter we started seeing the weakness in the earnings. And when I mean weakness, I mean year over year numbers weren't coming in at 100% return on investment, right? So a little bit of those year over year numbers start seeing 20% revenue increase year over year, 30% revenue increase year over year versus the 80, 90, 100% revenue increases that we were seeing in the first part of 2022. And so I was really anticipating Schlumberger's just as a little bit of a gut check. Where's the market's mentality at regarding the energy space specifically? And pretty decent numbers coming out of Schlumberger. Market sold it pretty aggressively. That should tell you a little bit of where the market's head is at right now, ending the first week of earnings season. A little bit of selling behavior. And the interesting thing is, market's not selling off like this. It's specifically the stocks that are coming in. And so Schlumberger comes out with 63 cents. Expectation was 61. Revenue came in at 7.7 billion. The expectation was 7.4. That revenue increase was 30% year over year. That's not a bad report coming out of Schlumberger, very similar to the conversation out of FCX. So what does it tell you about the market? This is an area of the market that's probably moving a little bit out of favor of the market right now.
No, it's just I don't know what it is about commodities this week, right? But I want, like, give me BTU, for example, just to give you an example, Matt. Like, I wanted to sell a neck put on BTU. I thought they had an amazing gapped up on this, but commodity pressure was weak. And I'm like, it wasn't just weak in this chart. It was weak everywhere. And I'm like, this is where patience. I'm like, I'm patient, patient. Just patient, right? Like it's just, when the market turns on something, you might think it's irrational. Just wait for the irrationality to get too crazy, or the bottoming pattern, right? Like it was a nasty week in commodities right this week. Just a nasty week. I mean, and precious metals, I don't even put in commodities. It's his own thing, right? I'm talking about like cyclical commodities. So,
well, the cyclical commodities had a tough week. There's no doubt.
Yeah,
commodities in general, a little bit, but the cyclical commodities got pounded.
So neither of the price responses on those two commodity-oriented cyclical companies like surprises me with the backdrop of how commodities have just been the temperature in the room this week.
I'm a little surprised, given that both of them didn't gap, but both of them sold down and haven't even attempted to recover yet. And so when you're looking at FCX here, like you're still hovering towards the low end of the price range there. When you're looking at Schlumberger here, you're at the low end for the price. So if we start to see a little bit of that recovery, maybe the market, you can also attach, hey, the market's seeing this as an overshoot. I'm certainly seeing this as an overshoot against the earnings backdrop. But again, you always have to respect the price action of the marketplace. Moving on, let's talk about railroads here, Frankie. CSX coming through here today. Unlike Schlumberger and unlike FCX, CSX comes out. Now, CSX, think about it like this. Raw numbers on Schlumberger and FCX, 2 cent beat, 5 cent beat. CSX, a 6 cent beat. Revenue both beat on Schlumberger. Revenue beat on FCX. Revenue on CSX beat by about 100 million. Came in at 3.7 versus 3.6 billion expectation. So when you're looking at CSX versus the other two, you're like, what's going on? again, it tells you the mentality a little bit towards
One
these
hauls
commodity
commodities doesn't produce
stocks.
them.
Yes.
If you're hauling
Massive.
commodities, it's fine. Recession won't impact you, or there's a congruence here.
There is, and there just seems to be like the market has shifted on the commodities in the short term, and a little bit was this algorithms on economic reports earlier, just this caught some momentum, but we just again, it's just another data point that suggests the mindset towards those energy type companies right now is shifting just a little bit, and we need to be see if the volatility that we saw kind of happen this week, if it continues next week. Frankie, on CSX, good beat on EPS, 6-cent beat, 48 cents, 42 was the expectation. Revenue beat as well. Thoughts on the gap here, gapping into a little bit of resistance. How do you handle a stock that gaps up into resistance? And whether CSX is a stock you would follow or not is not really the conversation. Just how do you handle a stock that gaps up into resistance?
Yeah, I mean, if you gap into resistance and square, shape up a little bit, cool off a little bit, I think it's a really good breakout opportunity from the resistance break point of view. Specifically on CSX, the problem is it's got a lot of layers right above that, right?
33.
And so it becomes a little bit of a difficult thing to map out, and probably a difficult trade to make. But generally speaking, I like when something gaps into resistance on earnings. It's one of the things I like most about earnings season, to be honest with you, is when we gap into resistance or gap down into support, and have to very quickly, sometimes that day, right, but very quickly make up our mind, is there enough oomph in this move to continue this momentum? It needs to be real to get through that resistance or that support. So I think the breakout is very appealing in those type of scenarios that gap into resistance or support. The challenge can be, day one stop loss, right? Can be tough, but even just that 1-2 hesitation, candlestick hesitation follow through is one of my favorite post earnings setups. We don't see it a lot because it has to gap. It's not enough just to gap. It's got to gap right? It's got to gap into a clear resistance level. Oh, hey, look, Matt, there's clear resistance.
Like if it gaps to 33 here, we're like, oh, give us 3 days in a bar. Let's go. Yeah, it's 32. It's like, oh, gross.
Yeah, so you don't see it.
Yeah,
you don't see it a ton.
I'm with you on that. Let's move on. Let's talk about PG here today. Ooh. Procter and Gamble coming through it today. No doubt about that. Breaking out of resistance, above resistance. I'm going to get Frank's take on it here in just 1 second. They came out with 137. Expectation was 132. Revenue came in at 20.1. Expectation was 19.3. That represented a paltry 3% increasing in revenue year over year. The story isn't on the run numbers. Whenever you have a company that provides guidance, it's typically going to be on guidance, and that's where it is today. Procter & Gamble raise their forward-looking guidance. Now, to me, I would say this is more of a reaffirming of guidance, which raised the lower end of the range, but it will be reported on out there as an increase in guidance. So you do have a little bit of a positive handle on the guidance conversation out of PG, Frankie. Good, decent beats. I wouldn't say great beats, but a decent beat coming out of PG. Guidance looks pretty good here. Gapping out of resistance here, Frankie, got a little bit of momentum. What's your thoughts technically here?
I think you are very interested in the secondary pattern. At least I am. Whatever that pattern might be, breaking through this resistance puts us into that next window, which, these guys have already been, rocking for us lately, right? We're into that next window, into the 164. Probably not today's the day to try to go get the trade to catch that, but whatever develops here, high base, flag into the 9, honestly, even a Cody special style into those old highs, I'm going to be really interested. It might be early next week, because I would be interested if there is the Cody special for a little scale in there. I think this is a really good situation technically, where you have broken through, you've established momentum, you've seen no signs of weakness. Earnings, backs that up. You're in the middle of, you're in the beginning really of the next window, right? Because if this was, a perfect chart, or if this was 2 months ago, we're like, hey, if this breaks that, 155, let's go, right? Because we got a clean window to 160 and 164. So I think this is going to be something that you want in your watch list. You're just gonna have to wait for whatever that secondary pattern is, and I guess you can chase it, but I'm not gonna chase
No,
it.
we don't chase. We don't
We don't
chase. But
chase.
the one thing I'll say is I don't think you want to see a gap fill here.
No, you
A
want to see
gap
155 hold.
Yeah, you want to see 155 and specifically 155 because of the overhead resistance here. You start to show weakness here. That's exhaustion gap type conversation. That's a trend reversal, perhaps. You want to attach your momentum inside, keep 155, clean that up a little bit. I like that call out there, Frankie. Moving on, let's talk about HCA. Frankie, I know you love your plans. Let's talk about HCA here.
HCA is nice.
They came through with the best earnings report of the day. No doubt about that. HCA
Not the
comes
first
out
time
with
they've been there.
493, and they're there again today. They came through with a really good report. 493 expectation was 399. That is a really good beat on EPS. When you're looking at revenue, barely topped, but top nonetheless, 15.6 versus the 15.3 expectation. That represented a 4% increase in revenue year over year. They weren't done. They raised 2023 full year guidance, both EPS and revenue, between 4 and 6%, just depending if you're looking at EPS or revenue. They have what we affectionately call here at Tackle Trading, pulled off the hat trick here, ladies and gentlemen. So we got another hat trick on the week here. I think that's the second one we've seen this week. Hat trick coming out of HCA. And the hat trick, for those of you that are not familiar with tackle trading lingo, there are some things that we make up names for, and we're no different than anybody else in the market. Everybody else does the same thing. But in terms of the hat trick is when a company comes out, produces a beat on EPS, a beat on revenue, and a legitimate increase in forward-looking guidance. Not the trickeration, not I want to increase the range, not I want to raise my range of a $5 range by 2 cents. No, a legitimate increase in guidance is needed. We don't see a lot of companies provide guidance. Number one, only about 25% of the S&P 500 provides guidance. Of that 25%, only about 23 companies right now provide forward-looking guidance that is positive. And so when we give a hat trick, it really does stand out, especially in this environment. HCH pulls it off here, Frankie. They're gapping. They're just kind of sticking here. What's your thoughts? Let me look at the weekly chart here. Yep, I knew it was gapping above that all time. What's your thoughts?
Yeah, I mean, it's beautiful. The issue I have, this is a great long-term stock, in my opinion. It is a tough trading stock because their personality, they tend to gap and then chop for the quarter,
and then
they gap
out.
and then they chop for the quarter. It's really hard to catch breakouts on this because of that. So you are kind of, just because of the personality of the stock itself, you know, I've been around these guys for quite some time. The personality of it says you kind of have to play these guys on retracements. Breakouts, at least for me, have not been all that great, and you know that hurts me to say.
You're the breakout king.
I love breakouts, and I really like HCA, and so it hurts to say it, but I think you have to get pullback analysis here if you want to be interested. The history of the stock just doesn't, over the last several years, just doesn't really give you much on the breaks. Maybe this time would be different, but
it's only had two significant short-term trends that a swing trader would be like, ooh, that's a really good trend.
Yeah.
Outside of that, you're absolutely right. It is one of those companies that has a tendency to, for one reason or the other, whether it's earnings, typically earnings, but for one reason or another, it'll catch some short-term bullishness and then flatline for a while. Short-term bullishness, flatline for a while. Good company, a really good company, and a really good earnings report coming out of HCA here today. So hat trick for HCA. We're going to end earnings roundup on that hat trick coming out of HCA.
One last thought on HCA. Like, it might be a tough swing trading stock, but if you're looking for investments and it fits in your parameters, investigate it. Like healthcare, like I like these things. Recession comes, well, healthcare is probably going to get a bid, right? Recession doesn't come, well, HCA has amazing earnings and a great report, right? Like, so like independently stands out no matter what from that. So
and despite the fact that we're talking about an all-time high on a company, and there oftentimes people in this environment like, oh, I don't want to mess with companies at the all-time high. I want to find those value. Well, we'll find a lot of value. What I will suggest is this. despite this company going up in the last year from the low price of 165 to 285, its PE ratio hasn't budged. It still has a 13 PE ratio with a forward PE ratio of, I believe it's 12. PEG ratio is 1.94. Valuation still, it still has the proper valuation as well.
Yeah, XLV. I just like XLV. I like healthcare, and if you can find the gems in there.
Hey, listen, if the plans want to lead here, healthcare becomes easier.
Healthcare becomes a lot easier, right?
Healthcare is not easy when biotech leads.
No.
Healthcare is easy
No,
when
it does
when
better
plans and big
when it's the
cap
health.
pharma.
Mhm.
You know, and you got a lot of big cap pharma earnings next couple.
Big
weeks.
cap pharma and the plans, when they're leading the charge, healthcare is really good. When it's biotech, it's choppy.
Yeah. Listen, looking forward to Frank's charts. Listen, we're going to be hard at work, earnings season or not, finding you the best trade setups we can in a very tricky environment. Because the charts might be messy on the broad market, but there could be some clean. We saw this in Trade Masters on Wednesday night, where Frank and Tyler both brought some very clean charts. That's what we're going to be doing here in the next several hours. But before that, the last thing we do on the halftime report every week is Frank's charts, where Frank and Matt, as a precursor to our scouting report meeting, kind of lets you see behind the process of the conversations that we have behind the scenes. And breaking down some charts technically. We call this segment Frank's Charts. I'm going to slip and enjoy this with the rest of the audience.
Well, and this is a little bit of a, like Mark said, a little bit of a preview for what we do in our scouting report meeting, and then ultimately what we release to our community in the scouting report, specifically the stock and the options report. And if you're not a member of Tackle Trading and you're catching this, just realize this is one of the things we do for our community, one of the many things, but this is one of the things we put out every single week so that our community doesn't have to go scan. Because Frankie, I did scan today, and it wasn't exactly an enjoyable experience.
No,
you have to navigate a little bit, but this is what we do every single week, guys. We find the best looking charts for our community, and then we put scouting reports together, and we put where the likely entry, where the likely stop loss placement would be, even though that's going to be a subjective decision that every trader in our community has to make. We help them identify those levels so that they can make those decisions for themselves. Once again, we call these the scouting reports, Frankie, and I'm looking at a couple clean charts on my end. Do you want to start, or do you want me to start?
Got a couple. You know what? I'm gonna let you kick off. Listen,
Okay.
Matt was in the thieving mood. He stole Martin's joke earlier.
I did.
And he was quick as a hiccup to take somebody. So I'll let you kick her off.
Okay, so what happened actually was me and Frank get into the pre-production show, and we're just kind of hanging out, just talking shop, and we get into the conversation of Frank's charts, and it usually starts with either Frank or me asking, "Hey, what do you think of this?" Right? Yeah. And so when Frank's saying that I stole his pick, I said, "Hey, Frank, what do you think of CRM?" And he says, "Oh man, I love CRM." I said, "I got it. It's mine. It's mine. It's mine." So that's kind of how that went down. CRM's my first pick here, Frankie. And again, one of the things with when you're in earnings season is trying to find things that don't have earnings in front of them and isn't going to be impacted that much from an earnings landscape. Now, earnings in general is always going to impact everything, because you get the big dogs that have thematic type moves for the entire marketplace. But then you always get these other software type companies that might report in the next 2 weeks that have a little bit of an impact on that. And so it does impact everything, but we try to find stocks that don't have to deal with that as much. CRM certainly fits the bill here. Doesn't have a report in sight for the next few weeks. I like that. What I like about this is pure technical here, Frankie.
Oh yeah.
$200 stands out to me. Number one, it's a significant whole number. I am not surprised, shocked, even slightly. It makes complete sense to me that the market hovers $200. It's one of those numbers that it takes a little bit to break out of that number, and you want to see that dance, right? You want to see the market dance a little bit before it goes into that breakout. I got this as an ascending triangle cup and handle type continuation pattern. And when you're in that ascending triangle continuation type pattern conversation, you're talking about the starting point of a new trend, not necessarily just attaching yourself to whatever happened in the past. And so I like that we're going into a continuation pattern. I love the high base here, Frankie, on the right-hand side. I love that high base. Look at this short-term consolidation. It's obviously telling you what the number, what is important here. It's 200, but you haven't given up anything this week, just hovering that 9 EMA. That 9 EMA is playing really good defense. You got your cup, you got a little tiny handle there. Look at that $200 price point here, Frankie. Now, you come out to a little bit of a longer term time frame here, Frankie, and this is why me and Frankie really like this type environment on CRM. It's not just the daily chart that if you break out of 200, you got some open air. When you're looking at this on a weekly chart right now, you're high basing against that $200 price range, the 200 SMA on the weekly chart that has previous pivot analysis with it as well. And when you're breaking out of that level, there's nothing until you get to 220. You break 220, there's nothing until you start working into the mid 240 levels. And so you just like the cleanliness at the top. And then if it breaks out, there's really nothing there on shorter time frames. Now, Frank, we're talking short term, but I'm going to go to the monthly chart as well, because this is what multiple time frame analysis is. It's looking at the different time frames to see if everything converges to an entry and if everything allows open air. And on CRM, you're breaking above the 50, you're breaking above the 20 monthly. And so when I say you're breaking out of everything, I legitimately mean you're breaking out of everything. Let me hold on. You don't even have to worry about it because it's already on top of everything else on the quarterly chart as well. And so from a daily chart to the, and I didn't do intraday analysis because I don't have to, because you're fighting at the top end. And so from intraday to daily to weekly to monthly to quarterly, this is a breakout. It looks simple to me above 200. Stop loss most likely underneath 195, hovering that 20 period moving average, certainly using the 9 EMA. Targeting wise, I think 220 is an easy T1, 240 is probably T2. We'll dial that in the scanner report because this is going to be on the list there, Frankie. Yes. I don't see this one getting
this is a spoiler alert. This one will be on the report.
This one's on the report. What do you think here?
Listen, I dare somebody to try to veto it. They'll get it. It'll be a fun moment for us to yell at
you and I will just sit there and won't even say anything.
Oh, I think we'll probably say a lot.
we'd have a couple sarcastic comments.
We might have a few things to say. Yeah, I mean, I love this chart. It's probably my favorite. It's so clean, and the multiple time frames, as you illustrated, line up so nicely. We were having a chat in over on Discord as far as breakouts and entries, and you and I both kind of were of the school of thought that you want to see this close because there's a lot of room, right? This is a lot of stuff. Yeah. And I kind of, I tried to simplify it. If there's a lot of stuff, a lot of reasons to like it if it breaks out, but no chance in the world that you would front run it, i.e. CRM here, then you probably, at least I probably want to close. If it's just a little bit of a high base or not a ton of resistance, probably going to be looking a little bit more of an aggressive entry. Had some good conversation on that over in Discord. I like a close above 200 with some follow through. Yes, 100% yes.
And for me, I'm right there with you. I think you wait for the close and then your 10% ATR above the closing candle most likely, right? Yeah, I do think that. Now in the scanner report, we won't be able to see that because we prep these stocks today. Our entry is going to be above 212. Yeah. But again, that's a subjective. That's if you're looking at the price today. If for me, it's always going to be a conversation of confirmation v non-confirmation. If you want to be aggressive, probably 25% of the ATR above the breakout channel is legitimate enough to be aggressive on entry without confirmation. But a lot of times when we're looking at a clean breakout, most of the time you're going to wait for confirmation, not going to front run that breakout, make sure that it can hold its head above that water. right?
Yep.
That it can, because if the target was 210 and you got a short porch, maybe you're a little bit more aggressive here, but you got some open air here.
You got a big window to
Don't
work
get,
with.
my philosophy is don't get faked out here. Let's see
Yeah.
the close and then let's giddy up and go.
Yep, absolutely. 100% on board with you there. I love it, Maddie. And I love that they don't have earnings, because I'm going to bring somebody who won't be on the reports because they file a day short of the earnings rule.
Break a rule. What do you got?
Shop.
Man.
Very interesting.
It'll get vetoed, but only for the report.
Yep, it won't be able to make it for the report. CRM will be. I'll be shocked if it's not, but Shop will absolutely not be. If we had one more day, it probably would be, or at least it'd have a legitimate shot. But such is life. If your rule says, hey, you can't, trade 14 days before earnings, then you're probably not interested in Shop. I always like to just, hey, I'm going to be out before earnings, right? If this were to, say, trigger on Monday morning, I have a few days to basically have all next week to be in the trade and be involved before I have to really start dialing it in.
Yeah, that 10 candle rule is for us on the scatter reports.
Correct. It doesn't have to be for any one individual, right?
Yeah, it's the scatter reports, because you don't want to hold a short-term trade through earnings, basically.
Exactly. And so this is one of those type of trades, but a few things I really like. I mean, the turnaround story has been nice on Shop, right? And then here recently, it's kind of messy and kind of tough to probably to realistically catch, but you had that nice little breakout that kind of established over the course of late March into about a week ago. And now you're kind of just drifting back into that 9. So you're continually making these higher highs and higher lows. Unlike some things out there, you've really maintained the momentum and maybe you can argue increased it to a certain extent. But what I really like about this, Maddie, is this is a cheap trade, cheap risk type of trade with good risk to reward. I think you are basically looking at getting in over yesterday's high. So at 40, I think 48.74. So I'm going to call it 48.75 to give it
right above yesterday's candle.
Right above yesterday's candle. We're going to looks like, at least as of right now, we have that inside bar right above the 9. So
that's really good intraday too. Can I just
add of course.
One context? Yeah. Look, Frankie called out for for yesterday's high, not today's high, yesterday's high. There was a reason for that, because when he's looking at both days, he's looking at this short-term neutrality, because if you go above today's high, you're still staring out down the barrel at yesterday's high.
Yep.
And so you look at that wick comes in. Where did it come into? It tested yesterday's high. You want to get it, you want to break out of that. And so you look at this neutrality here on the intraday. That's what you want to get above. And so I just wanted to add a little context.
Oh, yeah, that's spot on. Appreciate that. Because sometimes that's worth paying for. And this, in my opinion, is definitely one of those times. We know that we are relatively close to earnings, so we aren't going to be using a super loose stop loss, right? Because I'm not holding this to earnings. So I'm also going back to yesterday's candlestick, and I'm using that as the anchor. That's going to give me some intraday support, as well as the 9 EMA, right? Because that thing's going to creep up and line up with that probably very, very, very soon. So relatively low on the risk. That stop loss is going to come in right around 47.60, give or take, somewhere in that ballpark. We are in a window, right? I mean, we do have a path, probably not super likely in this short time frame that we have, but there is a path into the low 53s. There's no resistance of note that scares me. When I start to get into those 53s where I've kind of seen some topping back in February, I'm not going to target past that, but I'm not going to have to worry about that because I'm not going to have time for that. I'm probably not going to have time to get to 53, but momentum is a funny thing. Right, 2 candles that look like mid-February candle, especially on a Shop, right? All it takes is 2 candles that are momentum style candles, and all of a sudden we're knocking on that door. Hey, if that happens, I'm looking at somewhere in the ballpark of 3.5 to 1 on the risk to reward. That's fantastic. If I'm able to pull that off, what do I need though? I need to basically get to like 51.50. I need to get basically an ATR past that last swing high approximately to have a over 2 to 1 trade. I think that's more than reasonable within the week and change that I'm going to have to be comfortable within this trade. So playing this off of the bounce, seeing where it can take me. I like that we're in the window. The only real cold water is the earnings are approaching. This is one of those that if it was a break, I'd say it's kind of got to break tomorrow, right? Or Monday. If this has a red bar and doesn't trigger me in on Monday morning, probably going to take it off the watch list. It is going to kind of fall into that camp where we want to see this happen sooner rather than later. At least I do. But I think there's something here if we can get that break out of that yesterday's high.
Yeah, I like this flag. I like it a lot. Breakout, came right back, snapped back against support, hovered the 9. Looks pretty clean. Looks really, really good, Frankie. I like the pick. All right.
It hurts me not to be able to bring them to the meeting for today.
Just
but
one comment.
Yeah, me too.
Just one comment on these bougie underbelly type high volatility plays. The really good ones like DraftKings, Shopify, they've been really resilient.
Yeah, they have.
Very good.
Like, and so, the upper tier of the underbelly has had some decent price movement. So it sets up for a good trade.
Is the upper tier of the underbelly now officially called their little bougie? Is
the bougie part of the underbelly, right?
The high end class of the underbelly.
The bougie underbelly.
Right? I see what you did there. All right. So Frank, you went shop. I went CRM. Both look good. Went on a continuation breakout, and then shop on a really good flag. All right. I'm gonna go my bear. My bear.
Okay, who are you going with?
And there's some good clean bears out there. There's just not a lot of good clean bears. There's not a lot of
anything, right?
Charts, but there's not a lot of great clean bears out there. But there are a few, and the few do stand out, Frankie. I know you got one coming down the road that's really clean as well. I'm gonna go with Billy, Frank.
Ooh, all right.
Yeah, I'm gonna go with Billy. The reason I'm going to go with Billy is because I was going to go with yours, but then you took yours, and so I had to go to my second one.
Well, I saw the game we were playing this morning. I was like, I got to start calling out symbols.
Yeah, I know. I called out CRM, and all of a sudden Frank's just throwing symbols out like he missed out on shotgun. So I kind of missed out on that one. But I like it a lot for a couple different reasons. Significant whole numbers mean something to me. $20, $10, $50, $100. One of the reasons why I like CRM so much is it's not just clean against 170, 180, 190. It's really clean against 200. $20 is a little bit of a similar conversation here. You see that $20 handle right there. You've given up all your short-term moving averages. You've given up your momentum moving averages. Now you're hovering right there on that support level at 20. You break 20, it's a clean journey down to 18. You break 18, it gets really ugly underneath. And so it's just a base hit to 18, but that can open up to something a little bit more underneath 18. You come out to the weekly chart here, Frankie, and you're going to see a little bit of what I like on this stock. Once again, these little wicks over here, that's the 18 target. That's not a wick that, do I have to take into account the wick? No, the scale's off because this is a stock that has catered for a long time. And now you're looking at that $20 handle and you're saying, okay, the same way when we were looking at 30 here, and hey, you break 30, that looks good. Now you didn't do it. You break 20, it looks good to the downside. And so when you're looking just kind of scaling in here, you see that break at 20 here. Nothing on the weekly moving averages got you concerned. You're underneath all of those as well. And so it's just a really clean chart underneath 20. It opens up down to around 18, maybe 18.25. But once again, you start navigating those wicks. That's just a decent base hit. Now, once again, when I come out to the scale, that doesn't look like anything besides nothing, right? That's 10% underneath the current price. That's what those wicks represent, a 10% movement underneath the current price. And so you look at this on a daily chart, real good breakdown, just targeting the low, these candles and wicks over here. I'd call it 1830 is what I would call it, Frankie. That's just that base hit, but you got a tremendous reward to risk ratio here because your stop loss probably north of about 21, I would say. Probably right above this cluster of moving averages between the 200 and the 9. And so stop loss above 21, entry underneath 20, targeting 1830. That's not the reward to risk ratio I'm talking about. The reward to risk ratio I'm talking about is what happens underneath 18. If you get underneath 18, which also coincides with a bunch of chop over here, There's nothing until 12. There is
Yeah.
nothing until 12. And I'm not saying it gets there on one leg. I'm saying that's a good environment for it to work down into that, where you can see some decent volatility. And so whether it stops at 15 or 14 or 16, I don't know. What I do know is there's nothing in the chart that suggests it would stop at 14 or 15 or 16. And so I do think there's some open air underneath that 18, little bit of a base hit just to 1830. The real trade is if we get some volatility underneath that level and see 18 get broken. What's your thoughts?
And you know what I really like is you're going to be right about 2-1, and you might even be able to massage it a little bit if you dive deep, but you're going to be very close to 2-1 just to that 18, right?
It's like, yeah, it's like 1.7 to 1.
Yeah, so you're going to be really, really close.
Well, and if that's your first target, Frankie, you don't need 2-1 of T1. You need
no.
So you,
yeah, and so yeah, you got. I always like that when that first target zone is
is above 1-1.
Yeah, I mean, the higher the better, right? Nice little. I also love that we broke the 200 a couple of weeks ago. Didn't get any follow through. Anybody who knows me, when we're talking about moving average trades, it's close follow through, right? I'm a broken record with that. So we got the close. Probably thought 2 weeks ago it was going to drop. No follow through, and now breaking that 20, there's that follow through, right? And it's had more opportunity. It's not as extended as it was in the short term when that initially broke. I really like it. I think you're in a pretty good spot here.
Cleaned up intraday on that entry too over the last 24 hours or so. Look at kind of it get dialed in right there at about 2004, kind of fight the lows there. I'm discounting the overnight action there, obviously.
Yeah.
Yeah. What do you got second?
Very nice. All right. Well, I'm coming back to BBY. Did them in Trade Masters.
Yeah, they're
still super
hovering,
clean, right?
Just hovering, aren't they?
Just a hovering, and it fought yesterday. It didn't win, but it did fight. Nothing crazy here. I think we're looking at taking out that Thursday low here as confirmation. Let's break through that low. That would make me feel comfortable that this thing has given up the fight. Let's get below that. That's what, to give us a number, 72.45.
Or are you talking about the low?
The low from yesterday. Yeah.
Low is 72.29.
29. Okay. Yeah. So I was looking at today. So let's get below that. We basically have, again, it's kind of like one of those where there's really not a lot. You do have some history down in that $68 range, all right, where you've had some old highs in days gone by, and that's kind of stands out a little bit. It was resistance a few times, support a time or two. So I think we are looking in that 68 range as kind of that first window. It could be, again, one of those situations that could be T1, and I think we can still make it work to risk to reward. That's not like a tremendous amount of history, right? But there is some there, and I think it's worth respecting. If that goes, all of a sudden we can start looking down into the 64, 65 range, where we have kind of those next lows and chop that we had to deal with. Really just a clean little breakdown. Stop loss, I think we've got ample evidence as of now. Probably, I didn't say this on Trade Masters, but I feel comfortable I can say it now, probably above that Tuesday high, because we've tested it twice, right? Tuesday, we were kind of flagging-ish into the 9, and yesterday on the rally, we kind of ran right up into that same price and got knocked back down there. That starts to stand out as a little bit of a stop loss location, puts us, a little north of $74. Obviously, there's other ways to set stop losses on breakdowns, but I think you want to pay for some stuff, and I think we can afford to do just that. Just like this is a little bit of a breakdown candidate. I like that it hasn't tricked me or anything like that, right? Yesterday's candle, it looked like maybe the bulls were going to try to put up a fight, and they did early, but it's not how you start, it's how you finish, right? They finished really, really poorly. If that low gets taken out, I think this is a go, and look to fill up into that 68 window, kind of the primary target or target one, and then open up into the 64, 65 range if that goes.
Frankie, I like this one a lot. It's got a good breakdown. The story kind of writes itself over the last week. Good low base. The only question is entry. I do think you're underneath yesterday's low. I think that's kind of gave us the You know, we were looking at it earlier this week, perhaps on a potential breakdown. Tested underneath that yesterday. Could have got some people in, no doubt. Still looks good though. I like it. I like it a lot. All right, I'm debating over here, Frankie.
Well, listen, it's your last one, so I know you're going to go with a bull, right?
I'm definitely going with the bull. I'm debating two. Actually, I'm debating three.
Okay.
But I'm really kind of debating two now. I'm going to ask you, do you want to break out to the breakout king, or do you want a standard bullish retracement without confirmation yet, but looks pretty good coming into next week?
Well, I'm going to go with a breakout, and I don't want you to steal it. And I know it's on your list. I don't know if it's on your short list for this, but I know you have it in your watch list for this week.
I know.
So go ahead and give me that developing retracement. I need one of those.
All right, I'm going to give you the retracement, man. Okay. I thought for certain you were going to give me the breakout, but now you're not getting the cleanest breakout outside of CRM. Kidding. My breakout, what I was going to bring, if you don't bring it, will be on the report. Don't worry about that. It will be on the report.
All right, I like it.
And I will tell you if you bring up your breakout, if it was my breakout too. I will tell you.
All right, I'm good with that.
All right. So you wanted a retracement here. I'm going to go with Dell.
Ooh, all right.
Yeah, I'm going to go with Dell. And this is a conversation that is developing, that needs further development, quite frankly. You still, green candle still went down today. That's the identification in the first. And this is what retracement analysis is. Retracement analysis is zones that you expect those buyers to come into, and then waiting for those buyers to give you some confirmation. That's retracement analysis. The first zone that you're looking at for the buyers to step into, number one, this is a trend with momentum right now. And so you got some bullish momentum on this trend. You got an elevated increasing threshold of bullish momentum. Look at the price movement from the low here, 37 up to 41. Then it drives from 30, basically 40 up to about 45 and a half. That's increasing momentum in trend. That doesn't mean you can continue to expect the next leg to increase versus the last leg. That's not what it means. What it does mean is you have a higher probability that you will achieve at least 45 and a half is what it means. And so when you're looking at the trend, you got a good consistent bullish uptrend with bullish momentum in the last leg of the trend. That's a higher probability for the continuation of that occurring. And so when you're looking at the price now, the first zone you look at is you look at that 9 EMA, right? And you want it to be clean, but it's not always going to be clean. You're just in the zone. Remember the analogy of technical analysis is not, and specifically support and resistance are not man-to-man defense. It's a zone around those areas. And so you're in that zone of the 9 EMA. Now, obviously, I'd like to see it get back above the 9 EMA, but that's the first logical catalyst that you can expect some slowing momentum. And so the first thing you want to look for in bullish retracement analysis is the retracement slowing down. Then as the retracement slows down, you start to look at it and say, okay, what are the other parameters in bullish retracement analysis that I'd like to go through? Now, when you look at the step system, which is our swing trading system at Tackle Trading called the step system, you want to look for slowing momentum, and then you want to look for that upward movement in price. Well, where are we going to get that upward movement in price? Let's go into the 30-minute chart here, Frankie. So we have increasing momentum in trend, and we have decreasing momentum in the pullback. That is a good sign. Increasing momentum in trend, decreasing momentum in the pullback. And you saw that in just the size of the candle, but you also see that in the vertical distance between what's happening in your pivot analysis on the intraday level. Look what's happening as the market starts working a little bit lower in the bullish retracement. All of a sudden, the lows go from 44 all the way down to 42.75, all the way down to 42.50. You see that slowing momentum. You see that U shape start to form here, which is really, really good for bullish retracement analysis. And then what I like about it, Frankie, is you got a really, actually my EpiPen isn't really working here, But when you look at it like this, you also have a pretty good little trend line coming down here. And I'm just going to connect those pivot points right there. You have a trend line coming down that you're now, because of the slowing momentum, violating that trend analysis as well. And so everything is pretty textbook technically. The only question that I have is, and even on the stop loss, if the market confirms on Monday from here, stop loss placement is right here underneath 42.5. Easy. Yes. You got that's the low price of the bullish retracement. There's not a lot of volatility in this pullback here. Specifically talking about today's price action. Obviously, we were dealing with a little bit over here, but right here, there's no volatility in that. That's the market's showing you, or not showing you, but kind of telling you that support's being built here. And so the only question is, well, you got two remaining questions. Where's the entry and where's legitimate targets here? Number one, stop loss. And again, this is based on confirmation. You have to have confirmation on a bullish retracement. You're not buying a doji against support on a bullish retracement, or you're going to learn about depths of retracements very, very, very
learn
quickly.
The hard way.
One way or the other. One way or the other. You're going to learn through the school of hard knocks, or you're going to go get some proper education, but you're going to learn the valuable lessons one way or the other. And so in terms of this, you got to be looking for confirmation. The question is ultimately, where is confirmation? I think you can't be looking. I think you got to be looking at 43 here, Frankie. 43 is slightly above the 9 EMA. The high of today is kind of coincides with the 9 EMA. So I think if you can get above 43, whatever that candle is, let's look at that candle above 43. But I do think confirmation starts with the price getting above 43. Stop loss once again underneath 42.5. More than likely, Frankie, that confirmation candle's probably up here. We're talking an entry above 43.5. That's the most likely scenario, right? The most likely scenario isn't the candle confirms at 42 and we get a wick above 42.05. The most likely scenario is the market comes back into yesterday's high and we're dancing this 43.5 entry.
Yes.
That's the issue with confirmation on retracements in live programming, is they're not happening right this very second. You got to talk about where they could form. And so I do like confirmation starts for me above 43, but I want to see a close, and I want to see a close above the 9 EMA. And then whether it's 5% of the ATR, 10% of the ATR, either one, just something really, really tight against the high of the day. And then targeting wise, Frank, I think targeting wise here is pretty simple. Target one is you're just targeting up here around 45.
Yep, that's a recent high.
You just target the recent high. It gets a little bit better once above 45. You can work probably up into this range right around 47.5, 48. I don't think you get to 50. I think you got to target 48. So again, pretty structured bullish retracement. Entry is going to be a little bit subjective based on the close of the confirmation candle. Let's see that first. Stop loss under whatever the low is. Once again, right now it's 42.5. We see another down day, that might change. That's bullish retracement analysis without confirmation. And so that's what I'm looking at. Frankie, what are your thoughts?
Yeah, I like it, especially if we get that from where we are. Right. Any deeper, you know me, Maddie, if it were to pull back to 20, I'd still be like, okay, we could kind of apply some similar things that you discussed, but I wouldn't be as intrigued. Right. But if we see that confirmation candle on Monday or, early next week, kind of hold this low of this doji, your risk to reward is going to be really good. Your momentum is strong and would remain intact in that scenario. Really like it, especially if we can get there. And I like the call out. Not sure where the entry is, but if I had to put an entry, it would be above yesterday's high, right? That's kind of imagining the candle development that is likely if we get it, right? So I like the call out there. Good little retracement.
Forming. Now I'm interested. What was your breakout? I'm really interested to see if it was my breakout.
Well, my breakout is Roiv.
It was on the short list. It wasn't my breakout.
Who was your breakout?
My breakout was Aerospace and Defense Company, AXOM.
Oh, okay. So you're looking, okay.
Yeah, I'm looking at Axiom here, or Axiom, not M, N. not NAXON. There we
There you
go.
go. There you go.
Yeah, it's very clean breakout, very
Yeah, it
similar
is.
to CRM, very similar analysis of CRM. Instead of 200, it's 230, but it's one of the better looking ones.
Yeah, definitely
in
a
industrial
clean one.
space.
You know, I was going to throw out First Solar just so I could complain about earnings. Look at that developing breakout,
Yeah,
Maddie.
that 220
And
breakout.
unlike Shop that I could still map a trade out, not a
That's
luxury
tight.
on First Solar. No,
Yeah.
this is why I complained during earnings. But I like this ROIV, Matt. I really do. ROIV, a little bit of a small cap biotech type of stock. Not going to be for everybody. I understand that, but you got a really clean $9 breakout candidate here. You know, run into it back in February, fail. Run into it back in March, fail. Run into it this this past week so far, failed, but we're playing some good defense up here, right? Got to get through it. If it don't break, there's nothing to see here, right? But if we do break, got a super clean window to $10. So 9 to 10, that's a pretty good window
It's just that too. I mean, it's just a
that
good window.
it's just, I mean, that's all this is. This isn't I want to buy some Rove and throw it in my long term. I don't know enough about them to do that, but I don't need to for a trade. I like this $9 to $10 window. So we got to get above 9. We got to get above 9. We've not been able to do so.
Is this one of the ones, because you and I have been talking, and I guess the conversation in Discord this week on stop loss placement kind of sparks this question. But when I was looking at CRM, I'm calling for a confirmation above 200, right?
Right.
When I'm looking at my bullish retracement on Dell, I'm calling for confirmation above the 9 EMA, right? Here, because it's one of those stocks that can move pretty aggressively, biotech stock, for example, market is obviously telling you $9 to trigger here. You got a short porch to 10, and it could be quick, right?
Absolutely.
So it is one of those scenarios where if you're not aggressive with your entry above 9, you might miss out on the trade altogether.
Yeah, which is fine.
Which is fine. That's always fine.
fine.
And that's kind of my question for you is it still one of those situations? Because I know you agree with me on the confirmation call on CRM, and I know you would agree with me on the confirmation call on Axon and so on and so forth. But is this one of those scenarios where, because of the name, because of the industry it's in, and because of the cleanliness of 9 and the short porch to 10, where you might be a little bit more aggressive and say, I'm not going to get confirmation, but I'm just going to get an order above 9 to trigger if we get above 9?
Yeah, I mean, that's a good question, and it could go either way. But for me, there's just really two things that I think we can get basically above 9. We don't have to pay for the confirmation, although I would fault nobody for doing so. One, it's just a clear level, right? That's all. There's nothing else.
Very clear.
Unlike CRM,
bodies, everything.
But there's this average and there's that, right? And there's the big round number. I mean, hey, 9's a round number, but I don't think I'm going to confuse it for 200 anytime soon. So it's just kind of one thing, right? Yeah, we've tested it a few times. It's something that we absolutely should respect, but it is just one thing. And I'm going to couple that with the fact that we have momentum on this, right? So it's not like we worked into this and had a deeper pullback. Too. You know, we've got the volume, we've got the momentum. If we were to kind of dip back down into the 9 next week, take a run up to 881 in the middle of the week and kind of start coming back and start to lose that momentum, gauging that by the 9, okay, that would be a little bit of a loss of momentum, which would make me favor an aggressive entry a little bit less, right? But because I just have that one, it's 9, right? It's 9. There's not other things.
How I see it too.
And the momentum on my side, I would feel okay doing that. You know what's really cool though, Matt? And this is what's super awesome. I can do both. I can set up a partial entry at 905, 10% of an ATR above $9.
When in doubt, Frank Skellen.
Yep. And if it's, if it wants to just blast off to 980 that day, sweet, cool. If it puts me in a spot where it closes at 911, cool. I can get in and add the rest of the trade. If it fakes me out, hits 905 and then flips back around, stops me out, at least I lost a third or a half of the trade. We don't have to go all in, guys. And a lot of times, I know you don't, man. I know Mark doesn't. I know I don't.
Nobody does.
We don't have to go all in. We can work our way into these things. And so hopefully that gives you some ideas, right? How
I see it as a clean entry with the short porch. It's one of the scenarios, name, space, technicals, environment, just leads me to an entry of 905, put a buy stop limit order above that level, target 10, stop loss right underneath the wicks there. I do think it's one of those situations where you could rationally be aggressive on the entry versus a lot of times when we are absolutely waiting on confirmation.
Yeah. And when in doubt, and if you don't know, if you're on the fence, like, I don't know if I should pay for the close follow through.
Always pay for it.
The default.
Well, it's kind of like on the cash flow conversations. If you're having a debate whether you should write a covered call or not, you should probably already written a covered call.
Probably.
Right.
And if you're having the debate and you're not short, go sell that 20 delta. You can reevaluate later, right?
Exactly. When in doubt on a breakout, when you're talking and debating about confirmation be non-confirmation, pay for the confirmation because what you're really paying for is the probability analysis is what you're really
exactly. And while you will miss some in doing that, make no mistake about it, you'll also miss a lot of fake outs too.
The confirmation candle could easily be at 960, easily on this stock be at 960. So that's why the conversation, that's the only reason I asked, but I like the trade here, Frankie. You got any other final thoughts? I didn't want to.
It was a good conversation because it's important, right?
Yeah.
It's important to know how we want to do these things. And so nothing to add there. Just, I really like this window. I really do.
Out of your trades.
Well, it's been hot. I like CRM the best.
Yeah.
There's just too many things lining up, right? There's just too many things lining up at 200 that I just can't. Of course, it's just more visually appealing, right? It's like, oh, you got this moving average and the big round number and a clean high base on top of it. I'm going to be very surprised if there's not a few people fighting for CRM for the rapid fire pick this afternoon. I know there's going to be two.
Shotgun.
You can't call it in the halftime report. We call that the Mark rule.
Oh, is that the Mark rule? All right. I think CRM as well is my favorite too. It's the cleanest of the bunch. There's no doubt about that. But I think in the scanner reports this week, we're going to have some breakouts. We're going to have some retracements. We're going to have a diversified list and reversals versus continuation saga type technical conversations.
Yeah, absolutely. It'll be a smaller list. I would
always
expect,
is during earnings season.
During earnings, especially right now, this week, right? This is that week, right? Where there's, not going to be as many, but there's definitely some setups to be had as we work our way through earnings season.
Whether there's 8 to 12, they're going to be the best technical setups in the market. And if they are not the best technical setups, we're not going to put 20 stocks on our list just because we want 20 stocks on our list. No, If there's 3 stocks on the bull list, I'm perfectly fine with that as long as those 3 stocks are clean and good.
If those are the only clean ones out there, absolutely. Yep. Absolutely. I'm looking forward to next week, Maddie, because next week we will, kind of be.
Oh, you're going to be complaining about Apple coming down the road.
But I'll also be saying, but I know that after next week at this time, I'm going to be happy. And of course, we got the NFL draft next week to enjoy.
That's right. That is like popcorn event for you.
It is.
And 99% of the time it's popcorn event for me too. But the Dolphins don't have a first round pick, and I got Tyreek Hill, and I got a lot of other things, and I'm a very happy Dolphin fan. I'm not complaining. Wait, I am going to complain for just 1 second because the NFL took the Dolphins' first round draft pick away for. There might have been some things going on with Tom Brady. We won't talk about it here, but they took it away. So I'm not excited.
Bro. Can't cheat.
Listen, they were having a conversation on a boat. What's wrong with that?
We don't know conversation,
right? We have no clue what they talked about. Yeah, that's my bias as a Dolphin fan talking.
It is the Dolphin fan.
Okay, they colluded. They absolutely did. Yes, they did. But I'm trying to get excited, Frankie. I love the draft. I just can't because the Dolphins don't have a first round pick.
See, and while it's always more fun when your team is picking, I love the stories that come along with the draft where you get to, see the background of the players. You get to watch the guy who was going to go early and maybe he slides a little bit. And and ultimately finding a home. I think there's a lot of great stories, and you have to remember, I mean, for these young guys, I mean, this is a dream come true for them, and who doesn't like watching people hit their dreams, right?
Hey, listen, I remember
I enjoy it.
when Lamar Jackson was drafted at the end of the first round. I became a Lamar Jackson fan because of the interview right there, live, the emotion, the disappointed he wasn't drafted higher, even though it was first round. But he's like, I'm going to do. Kid's made a career for himself, hasn't he? Right?
So,
Like, I
yeah.
love the draft. I love the draft.
That's, yeah.
Baltimore should pay that young man.
You know?
Absolutely.
So
Absolutely.
Dolphins
he's very good.
Listen, all you're going to do is draft another mediocre thing that leads you to mediocrity.
What are you
right?
talking about? Do you even watch the NFL lately?
This is going off the rail real quick.
I watched the Super Bowl.
We do
I
this
ain't
a
seen
lot.
the Dolphins in it recently.
This has to happen in our scam report meeting a lot. Stop loss. Because we get going.
Stop loss.
Listen,
true.
It has been a busy week. It will remain a busy week. Listen, we'll break all of this stuff down on the halftime report. But Frank, give us some final thoughts, and then Matt, send us out.
Yeah, I mean, hey, it's earnings, right? Make sure you are factoring in that on the way you're managing your trades. If you know you're going to get out on chop, less than 13 days, I don't have time to sit through a pullback, right? I'm going to be pulling that stop loss quick. I'm going to be scaling out aggressively because I don't have any time to sit through any nonsense, right? Make sure you're factoring that. And most people do a great job checking, make sure that I could build this trade. I have enough time. It can be very easy to forget that you need to apply that on the management side too. You've got that ticking clock. Make sure you're doing that. If you're having troubles with that, of course, you know where to find me. I'm in the Discord channel a lot. Not a hard dude to find. I'm always happy to talk with you. Have a great weekend too, and I'm looking forward to this earnings season coming to an end. Just in case you couldn't tell, Mark.
The over under on complaints. The over under on complaints. I have to listen to Frankie about earnings season. Will be slightly higher than the complaints he has to listen to me on earnings season. I'm setting the over under at 30 for him and 25 for me. That's the over under there. Frankie.
I probably hit 30 this week between Trade Masters today
Discord,
and Discord.
whatnot,
Yeah, probably pushing 30.
Couple of things, team. Number one, really enjoyed a couple of the Discord conversations this week. Enjoyed the Discord hangout on Wednesday. But, Matt Reno asked a question on stop losses yesterday, and it triggered a lot of good conversations on stop loss philosophy, management, placement. Really enjoyed that conversation. If you're new to tackle trading and you're a pro member and you don't have access to Discord, you can always get there right there at bit.ly/join team tackle. That will give you access to the verification. If you're not a pro member, you can get access to Discord, but it's more just one channel in Discord, the new trader channel. Our Discord is popping in a lot of different ways, both from the labs, mastermind groups, obviously lots of other conversations as well. So really enjoying the conversations over there in Discord. So keep it up, team. Those are awesome. I've really enjoyed them. Number two, Coach Gino and myself are teaching the option success class on Monday and Tuesday next week. I know we have quite a bit of our pro members registered for that class. That class is a beginner level class, there's no doubt, but you know how I get down. I always go to the intermediate style fairly quickly from a technical perspective. And whether you're new or you're not, and you got a lot of experience, I promise you it's going to be a fun, educational, great time next Monday and Tuesday. So pro members, if you're registered for that class, make sure to show up and have some fun with us on next Monday and Tuesday. And if you are not a pro member and you are looking for some great education, when you sign up for a pro membership in tackle trading, you get access to that class that we talk about, the option success class. It's a 2-day class, 5.5 hours of training, 2.5 hours on technical analysis. Yes, that is me. About 2.5 hours on the options standpoint. That's Gino. And so it's an awesome experience. I hope every one of our pro members have an opportunity to come join us over the next few months in that class. It might be a review for some of you pro members, but if you are new to tackle, if you're new to the market, it is the best place to start from an educational perspective. And so once again, that's called the Option Success class. That's our next one is being taught on Monday and Tuesday. If you need any information, if you're not a pro member and you want to register for the class, email Mark at Team and Tackle Trading at this point, because you got to be a pro member to attend the class. That's kind of the rule. That's kind of the rule. And so after that, we're gonna have a lot of fun. So if you want some information, yeah, Michelle, we probably sent you an email, Michelle. You certainly, it might have went to your junk, but I did send an email about a week and a half ago to the pro members to sign up. If you cannot make that class, remember, we teach it about every 2 to 3 weeks, guys. So if you can't make the entire class, if you're a pro member, don't fret. We will teach it again in 2 to 3 weeks from now. But if you are not a pro member, email Mark at Team at Tackle Trading. If you are a pro member, email Mark at Team at Tackle Trading. That's how we'll get it done.
Yeah, listen, we
All right.
appreciate y'all.
Yeah.
We appreciate y'all. Have a great weekend, everyone. We're going to go get hard at work for you. Get those scattering reports finessed. Make them as bougie as possible. Have a wonderful
Let's
weekend,
kick that
everyone.
word out of tackling.
Have a good weekend, everyone.
See you, Tim.